Hey, what's going on, everybody? It's Riley here again. This is actually my second time recording this video, unfortunately. I guess whenever I took off my earbuds, it stopped the video. Um, but anyway, hope you guys are doing well. Today was a small green day for me. I made 24 bucks. But I'll take it. Learned some good lessons today. I'm going to kind of go through this pretty quick because I literally already did it. We'll go ahead and start on the bigger picture context once again. Okay. Let's see. So, today I was looking at ES for an all-time high break, and then I was looking at NQ for a break of this daily consolidation range, like very key level on the daily. You can see we tested it multiple times. This purple level here, tested it here, a couple more times here, and then once again here, and constantly rejected and bounced back down to this lower trend line, lower key level. But anyway, over the past few days, we have been rallying like crazy. Zoom out. But still, NQ was relatively weaker. We're a lot further from all-time highs than ES. ES actually opened up right underneath all-time highs and broke far above today. That's insane. The contracts are probably up crazy. Excuse me. But anyway, so with this in mind, I was looking to play calls for an all-time high break, or I more so wanted to find a setup to pre-run the all-time high break in case it didn't work out. But anyway, I'm going to go ahead down to the 1 minute. I was looking at 5 minute for the most part today, and then I would zoom into the 1 minute for an entry. Once I saw like a nice setup on the 5 minute, I would zoom into 1 minute. Just kind of helps me to see the reactions, but the 5 minute helps me stay calm because there is a lot of noise on the 1 minute. But anyway, my first trade. Oh, okay. So real quick, we had these two bearish chart patterns in pre-market, or actually like right at the open, both in supply on ES right below the all-time high, and then on NQ right below this super key daily level. So with all the rallying, like insane rallies we've been having lately, I wasn't too worried about this chart pattern. But you just got to react to what the market gives you. So right before we opened up here, ES and NQ were mirroring each other very well today. I will say that. There were some pretty crappy algos, but anyway, I'm going to make sure this is still recording. Yep, okay. Anyway, right before the open, down here, sorry about that. So we actually had an ascending wedge here. I was looking at the wrong thing, but ascending wedge inside of supply, bear flag inside of supply, pretty much same deal. They both came down, broke these chart patterns to the downside, looked bearish, came back down below yesterday's high of day on both futures, and then found buyers right at the open and totally like plowed back through all these levels. ES was relatively stronger, and you can see we went all the way through yesterday's high of day, the lower trend line, and closed above pre-market highs. Over here on NQ, the first minute, let's see. First minute, we made it back above yesterday's high of day and the lower trend line, not quite pre-market highs. So I wanted to see us find new buyers above pre-market highs, and then also I wanted to see a break of these chart patterns to the upside, and that would give me my judgment point and like a valid entry. So I went ahead and bought calls once we broke above this upper trend line of this bear flag, and had my stop loss at pre-market highs. And I basically was looking for basically just confluence. I wanted to see NQ rally above this supply here. Excuse me. I'm going to get a drink of water. So NQ was able to rally straight up. This was like really strong. I already thought we were overextended on the daily on both futures. Like, if you just take a look, this rally has been absolutely insane. End of year rally. Compared to all the other candles, we have not really had this many big green candles in a row. I just, was expecting a bit of a pullback today, potentially. But that was not the case. We kind of just kept grinding up all day. Sorry, TOS has been kind of funky lately. Anyway, we came up. We were making demand on the way up. And ES started making this pennant. So, that gave me additional confidence. I moved my stop loss up to this bottom of this consolidation range here. And basically, I saw us break to the upside here. We weren't quite at this key level yet. We had come up and pulled back, same as we did over here. And then we started rallying up, and then this next candle basically tested the key level, rejected and closed below. So not any crazy volume, but not what you want to see, especially at a key level like that. You want to see buyers push us straight through. So at the same time, we had broken above this pennant and we're basing. This actually looked very good here. We had a slight volume increase on this break. And then this basing candle had a nice lower wick and had retested the upper trend line. But this is one of the algos that I'm going to talk about. I saw this exact algo 3 times today, twice on ES and once on NQ, where we break above this flag pattern and then end up closing back below, and then it retests down here and then closes above. And that that is what shook me out of this trade. Anyway, I just was not going to stay in this. If I had honored my stop loss down here, that would have been great. I could have gone all the way up to my target. Well, actually, my initial target for this would have been, since I only have one contract, I would either sell when I saw weakness, but I was targeting 47.50. Anyway, this just, did not give me the follow through that I needed here. And at the same time, we were rejecting this super key level and had a nice volume increase with upper wicks. So I got out as soon as this candle closed here. I just wanted to see more follow through, and I wanted to see this close above and then, rally straight up. But as the day went on, I started realizing that today was not a very high volatility day. We were just kind of chopping around, but grinding up. Every dip kind of got, bought up. But there were a lot of tricks along the way. So if I had widened my stop loss a bit and moved it up from here to here, instead of like literally selling at the first sign of weakness, then I could have rode this out. But when I'm only playing with one contract, I'm going to continue playing defensive like this. Kind of sucks, but got to build the confidence and build the account before I can really, start selling. I would sell like 50% here and hold runners, sell another few here maybe. But, just got to work up the confidence for now. My second play was very, very stupid. It's pretty much a FOMO play on QQQ puts. So, kind of valid, but we did not have the confluence that we needed. So we had rejected this daily key level, and we were selling off, put in a high or a lower high, and had this big red candle. At the same time, we were rejecting all-time highs on ES and sold off pretty hard. Not like a super significant increase in volume, but those red candles, they were giving me a little bit of additional confidence that this was going to continue lower. So I bought in right as this basing candle closed here, anticipating a DVD. I did not see this demand zone here whenever I bought in. All I saw was this demand zone here, which I really shouldn't have bought in anyway because we wicked whenever we tested that. As you can see here, closed above, and then this candle also closed above, so I should have waited for more confirmation instead of literally just buying in when I saw a, a basing candle. It wasn't even a good basing candle. It had a long lower wick, and it was bouncing off demand, and it actually closed above this demand, which I did have marked. This is like a very iffy demand zone, but still closed above or closed inside. Sellers were not in control here, so I should not have taken this trade. Learned my lesson, and especially, I mean, all these buyers factored in. We had this huge rally, and over here, there's really, really low probability of us dropping after this long consolidation phase. It's more likely that we're going to retest and at least bounce again. We could continue lower, but unless you see this candle close below this demand zone and then selling volume increase. Look at this. There was this selling volume and it decreased as we got closer to the zone. So sellers were not really showing any more effort and they weren't being rewarded. These lower wicks were showing that buyers were in control. So just really a low quality trade on my part. Unfortunate that I took this one. I really should have been paying closer attention, looking over here, seeing that we have demand below still, seeing that this was forming a descending wedge, which I didn't notice at the time because I bought in as soon as this candle closed. I didn't give myself a chance to look and chart that out. So if I would have seen that, I would have avoided this. But once again, learned my lesson. So my next trade was actually pretty good. Just got shaken out again due to the algo. This is where I see it twice again. So I was anticipating this daily key level break. And at this point, NQ was actually relatively stronger on a lower time frame. You can see we broke above this lower high. So we were going to put in a higher high. And at this point, we were still below all-time highs on ES. So I bought calls on NQ. Once a candle closed above that key level, I wanted to make sure that buyers could defend this level. So once we closed above, I bought in as soon as this candle closed, right at the bottom of this candle, and set my stop loss down here at the bottom of the basing candle. And we basically just, tested above supply a few times, based out and formed demand, pushed up. So this was looking really good. I did not have this 5-minute intraday supply zone marked. And it really kind of skewed my trading today, but due to my rules, I would have stopped out here anyway. This is just another thing, this was not really a scalping kind of day as far as like the market movement goes. Like I should not have been, I don't know. This was more of a grindy day. So scalping on this, if I require like a close above every single time, or, I'm not going to find all of my confirmations. It's real choppy, but all the dips are getting bought up. So I should have widened my stop loss, down to here, down to the bottom of this consolidation range, which is the bottom of this demand zone, a valid stop loss rather than just a chart pattern, which is what I think I need to start doing. I need to stop using chart patterns as stop losses and start using actual like chart structure, like demand zones, consolidation ranges, stuff like that. And that'll help me stay more confident in my trades, because these really don't mean anything. It's just the fact that a lot of retail traders have their eyes on them, which is why I think this algo worked out so well today. If that's what it was, I'm not sure. But basically, same thing happened here. We came up, broke above this pennant or descending wedge and tested this 5-minute demand, sold off pretty heavy. And actually this candle totally killed the premiums, just like it did last time. We broke to the upside, probably everyone bought in, and we're just grinding here. So, excuse me. Since we were grinding, premiums weren't up that much, but this red candle, since it dumped, it killed my premiums. And I sold out for a $20 or 20 cent on my contract, a gain of 20 cents on my contract. So, these market conditions, I learned some valuable lessons from them today. So when the market is like this and we're basically just every dip is getting bought up and we're grinding up or melting up, whatever you want to call it, I need to widen my stop loss. Still make it a logical point, but widen it. And I think overall, I'm probably just going to not use chart patterns as stop losses. Especially whenever I'm already in a trade, there's no reason why I should be using this as a stop loss whenever we have this valid consolidation range with a lot of buyers factored in. You can see we didn't even have that big of a volume increase on this break. So, just in my opinion, I should not have stopped out here. And you can see we would have gone up to hit my target. Fresh daily demand. Excuse me. And then we even went up and eventually we hit fresh 2-hour demand, supply above. But yeah, the main lesson from today is that, I need to work on my stop losses a little bit. I have good entries. My targets are logical. I don't shoot for super far away targets or anything unrealistic. Especially when I'm only playing one contract. But I definitely, if I'm holding for this long and we're just kind of grinding, and I know that every dip is getting bought up, like we're just rallying, pretty much all day. There is no need for me to stop out. Literally because this algo killed my premium and I'm worried, if that makes sense. Anyway, probably just talking out of my ass per usual, but I thought that this was a pretty successful day of trading. I was very defensive. I did have that one FOMO trade, but the other two were valid setups and all of them helped me learn very valuable lessons. So that's it for this video. If you guys have any questions, please feel free to put them in the comments below, as well as feedback. I really do appreciate any feedback that you guys give me. Thank you for watching and good luck trading tomorrow. Peace.